Today we're taking a look at new kind of network, NKN, cryptocurrency analysis and prediction. Welcome back to Crypto Cash, your one-stop shop for cryptocurrency analysis. Before we take a look at NKN, just consider subscribing to get notified as soon as these videos are released. This gives you a head start so you can effectively plan out your trades. I have years of trading experience, and my goal here is to share my knowledge with the world, so thank you very much for tuning in. I always like to start off with the fundamentals, then dive deeper into the technical data. I also provide you with action plans for the future so you know what to do in each scenario as a day trader and swing trader. So be sure to stick around to the end for my recommendations. Please note, this is not financial advice. This video is designed for educational purposes only. Now let's get started with the fundamentals. NKN, or New Kind of Network, is an open source protocol for public blockchain based peer to peer networks to share network bandwidth and internet connectivity. The project was launched in January 2018. NKN's consensus algorithm is based on cellular automata. It's a new kind of science and icing model where the simple local majority rule can lead to system level convergence in a small number of iterations. Total supply is 700 million, max supply of 1 billion, circulating supply is at 58%. Today's high is $1.08. Today's low is 92 cents. The 52-week high is $1.49, which took place recently, and a 52-week low is 0.0055. Now, the price has more than tripled over the past week and shot up approximately 247% in one day. However, now it is safe to say the bears came to play, driving the price down approximately 64% in the past 48 hours. Regardless of how you look at it, this is excellent still for trade traders and swing traders because of the high volume and volatility. Major resistance line is $1.49. Major support is 92 cents. For my day traders out there, looking at the 15-minute chart, you can see the moving averages have been working as a strong resistance lines over the past 48 hours. Now, the 100-day moving average is the stronger of the two. Obviously, you can see that. However, it was just broken, but didn't hold for very long. So it might become a support level soon, so just pay attention to how it reacts over the next couple of hours. But for now, it's hard to say specifically what it's doing. Also note the RSI is lowering around 40, and the MACD also shows momentum could shift soon. These are positive technical signs. Now, here's what I would do as a day trader in this situation. If I were to consider a long position, I would wait until 30 minutes after the resistance level is created by the 100 moving average and it's tested to see if it's broken and falls below. Then I'd wait until a secondary support level is created. I would also pay attention to the RSI to identify when it's considered oversold. Again, anything under 70 is ideal. I think that's kind of a sweet spot personally. I would also ensure that the VWAP is holding. I always prefer to take half positions until the VWAP is tested twice. That way, until I get my full-on confirmation that it's all set and good to go, I simply just leave it the way it is and hold only maybe half of a full position. Once the RSA hits 80, that's usually my sign to get out. I would sell off half my position and then wait to sell off the rest in smaller increments as I get closer to my goal. Again, to preface all of this, I always set a goal before I get into my trades. That way I know when I need to get out. I recommend you do the same. For my swing traders out there, let's go ahead and look at the 4-hour chart. You can see the RSI is pretty low. You can also see the MACD shows us it's changing its momentum. Okay, now it's changing in a different direction, which is quite possibly a very good sign. Because these are positive technical signs to go along, I would recommend just paying attention to the 50-day moving average, though, because it hasn't caught up yet, so we really can't rely on that. It will catch up soon. Obviously, see what happens when that takes place, but for right now, don't worry about it. The only thing else we can possibly do is basically just wait for the next 4-hour bar to close and see if it closes green. That would be a positive technical sign. If it does show us some momentum has shifted, also pay attention to the volume. Until there's an increase in volume, it's hard to kind of tell if the bears are conceding right now. Now, if I was feeling bearish, which does seem like a decent possibility here, I would want to short using the 15-minute chart, but I would also wait until after maybe 15 to 30 minutes to see if it's respecting the resistance level at approximately $1.05 or $1 even. In that situation, I would add or consider opening maybe a short-term trade position, maybe even adding to my position as close to the resistance level as possible. Meanwhile, identifying if the RSI is not oversold and look at the MACD to ensure the momentum is shifting in the direction I'm heading. Keep in mind, this would be a short-term trade. Never forget to average down and sell in approximately 5 different transactions. This is the key to always ensuring you're profitable. Now, if I was going bullish and feel like I was going to go long, I would make sure the currency is still respecting the support level after two 15-minute green bars. In that situation, I would be looking at opening a long-term trade position as close to possible to that support level, while keeping in mind that this will be a short-term trade. I would also, of course, identify the MACD verifies the momentum is in the direction that I'm heading, and obviously, getting an additional indication of a buy signal. I would then add to my position and open a, once I get closer to the goal, I would then average up my position by selling in small percentages of my total. Now, I can't stress this enough. Make sure you set a target, and if you don't hit your target, just get out and take your profits, or even take a small loss if that's the case. But as long as you never go all in at all times, I think you're going to be just fine. Just learn to practice it and use small positions first. You should never go all in unless you're holding on for dear life. That's my motto. Again, it's easier said than done, I know, but with time you'll get better. And try not to get discouraged if things don't go your way. There's a lot of other opportunities out there. Just remember this: the key to being a profitable trader is to survive to trade another day. If you find benefit from this content, please like and subscribe. I want to wish you the best of luck on your trades. Really want to thank you so much for tuning in this long as well. And I'm kind of curious, what positions are you holding? Let us know. Share in the comments below so we can all grow and build together here. Again, thanks for watching. We'll see you again soon.